Thinking Byzantine New here, and today we'll be going over Rocket. Now, for a quick disclaimer, I am not a financial advisor, this is all just my own opinion, and your investments are your own responsibility. The information that I'll be using was from December 27th, 2020, or before. Now, here are some stats about Rocket. We had a previous close of $20.76, a 52-week high of $34.42, a 52-week low of $17.50, a market cap of $41 billion, around that area. There's no dividend for Rocket. The PE is at around 5.21. Rocket was founded in 2015. The ticker is RKT. There are around 2 billion shares outstanding, though most of them are Class D. Also, we have around 26 billion shares authorized for Class A, B, C, and D. And with all IPOs, there is definitely a lockup period. Now, there's no really recent news for Rocket besides the fact they did at Q3 earnings, they announced a $1 billion buyback. Now, what does Rocket do? So, according to Rocket, Rocket is an online mortgage experience developed by Quicken Loans, America's largest mortgage lender. Rocket isn't a calculator, it's a way to get a mortgage. Just tell us about yourself, your home, your finances, and we'll give you your real interest rates and numbers, and not just our best guess. Then you can use Rocket Mortgage to get approved, ask questions about your mortgage, manage your payments, and more. With that in mind, Rocket makes their money by selling the loans that they approve, service fees, and a bit of interest. Note that they do not hold the loans themselves. Now, here are some business segments / companies. When you buy a share of Rocket, you're buying the holding company, and this holding company includes Rocket Mortgage by Quicken Loans, Amrock, Lendesk, Edison, Rocket Homes for sales by owners, Rocket Auto, Rocket Loans, Rocket Connections, Core Digital Media, and Lower My Bills. Also, Rocket is trying to expand internationally with Lendesk and Edison Financials. Now, here's their most recent earning number summarized. Up 186% year over year in revenue from around 1.6 billion to 4.6 billion. They beat their projections by around 12 cents. They increased their gains on sale margin by 37% year over year to a strong 4.52%. They have a current ratio of 1.2, and in my opinion, their earnings were propelled by the refinancing boom due to lower rates. Now, here are the projected sales for the next quarter and the next year, and as you can tell from these numbers, Wall Street is expecting a down year next year. Now, here's my bearish thesis for Rocket. Rocket is dependent on interest. Rising interest rates will make banks more competitive / less refinancing through mortgage servicing rights. Increase in value when interest goes up, so it's a bit of a real mixed bag. The refinancing boom may end sooner than expected, as seen in the last slide with their lower earnings. COVID affects people's ability to pay back these loans. And if you look at the point below, they have a delinquency rate so far of around 0.7%, and a delinquency rate with forbearance is at around 4%. And if people are unable to pay back these loans, these delinquency rates / forbearance rates may increase. Plus, Rocket is competing with banks and other non-bank lenders, which could be a serious problem for Rocket as banks try to become more competitive in the future. Plus, Rocket is sort of dependent on government agencies and government-sponsored enterprises like Fannie Mae and Freddie Mac. Now, here's my bullish thesis for Rocket. They're the largest mortgage originator, surpassing Wells Fargo in 2018. And due to their middleman type business, selling the loans to government-backed agencies, businesses, and investors, they have less of a credit risk than banks. Lowering interest rates have helped Rocket in that there's been a refinancing boom where people try to refinance their mortgages at a lower rate, which has been good for Rocket. They also have a higher retention rate than the overall industry, 73 versus 18%. They have growing market share in the loan origination business. Their app streamlines the process to get a loan and creates a first mover's advantage in this area. The app also cuts out some costs by taking out some loan officers, and they have better margins than their competitors for loan origination. When we evaluate Rocket, I was using book value to price, which probably is not the best evaluation method, but I'm using it anyway. But since Zacks does not have the price to book for GHLG, Guild Holdings, and Rocket, I calculated these values myself. So we have for Guild, GHLG, we had 1.47. Lemonade, which is not a really good comparison, but it's fintech, insurance. It's sort of in that in the area there Rocket's in, but not really. I mean, they're both finance, but they're just in different sections. So I chose Lemonade mainly because it's fintech, and Rocket wants to become fintech, or they're trying to get a fintech evaluation. So I had a fintech company here. And Lemonade's value is at 13.37. Their book value to price. We have JP Morgan, the biggest bank in America, at 1.575. And then we have Rocket's book value to price at 6.215. So as I said, Rocket is not entirely viewed as fintech by everyone. As some see it, it's just a regular mortgage lender with an app. They have a lower credit risk than banks, but they're not really a bank. So with that in mind, I'll just take the average of JP Morgan and Lemonade and get the average of their book value to price, getting a sort of bearish book value to price. If we say Rocket is fintechish, like it's half and half, like I said, Rocket's a really weird company to evaluate using this method. And when we do use this method, I get a fair value for Rocket at around $23.94. So which is basically the median estimate for many analysis, so around $24. So with that in mind, if we evaluate Rocket based on my thesis and the numbers, then there's around a 15% upside, but for me it's a clear hold for now. There's too many macro factors that pose a threat to this business, plus the refinance boom may end sooner than expected if we use earnings projection for next year, but it may continue longer. So it really depends on what people are doing. And if people are refinancing more than expected, I expect Rocket to go up a bit more. If we see that Rocket does not meet those expectations, well, prices will go down as expected. But if I had to get into this company today, I would like to get it into the $19 range or lower. Like and subscribe for more content, and go down in the comments and tell me what companies are you interested in next, and what do you guys think of Rocket Mortgages. Thinking Byzantine out.